commodity trading, and that too in gold, silver, and bullion. That's what we're going to discuss today. So, we have already made two beginner friendly videos. The first one on everything that you need to understand about commodities before you get into it, and the second one, a deep dive into crude oil trading. And in the third video of the series, here today we're going to discuss gold, silver, and bullion. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So let's get started with the presentation. Gold, silver, bullion, commodity trading, that's what this video is about. And why is the reason that a lot of people want to trade in these commodities and they're very interested? It is because of the high liquidity that is being offered. Gold, silver, and even bullion is often traded by huge jewelers and big players in the market who want to hedge their portfolios. Because of this, you have a lot of liquidity, but you still have to watch out before you start trading. That's what we're going to discuss. Okay, so why commodity trading? I want to remind you that trading after work is a concept here. If you're a really good trader, but you're not getting the time to trade because of your office or your work commitments, trading after work, that is from 5 p.m. to 11:30 p.m. in the Indian market without any random brokers, through your very regulated brokers like Zerodha, Upstocks, Fires, or even IAFL, you can start trading in commodities. That is the beauty of it. So let's go ahead. Agenda of the video. First, we'll understand how to trade in gold. Then we'll quickly understand how to trade in silver. Then we'll also get into this concept of bullion, right? Which a lot of you might not already know about, which is a mixture of gold and silver in a particular ratio. We'll get to that. Then we'll get into the capitals required. What impacts gold and silver prices? How do they move, right? We want to know that as well. Then we'll also be getting into one important thing, which is part of our trading strategy, which is gold to silver ratio. So let's discuss gold first. So first, I want you to understand what is a gold price calculation. Okay, for this, we'll quickly come into trading view and type in gold. Okay, so this is a price of gold in the US market in dollars. What does that translate into? $2,702. But one thing that you have to understand is that this is calculated, or the weight being considered here is 1 ounce. That is not something that we regularly use in India. Let's try to understand 1 ounce to gram. So 1 ounce is 28.34 grams. Now, why do you need to understand this? I'll explain, do not worry. But in order for you to understand, we'll do a very quick calculation here. So here you have to take the spot price of gold today, which is 2,702, and multiply it by what is the conversion number here. So 35.27, if you do this conversion, you'll understand you need $95,299, okay, dollars to purchase 1 kilogram of gold. That is 1,000 grams. So in order to again do a simple calculation, you can see that in order to buy 1 kilogram of gold in the US market, you need at least 82 lakh rupees, considering rupees value today is at 86. So you understood how is gold price calculated. So gold price, you can calculate it very easily by multiplying what is the price of gold in US dollars multiplied by the USD INR exchange rate. We learned the same concept in the crude oil trading video also. So if you have not watched that video, go check it out right now. So with this, you'll understand the gold INR price. And as I said, if you do the ounce to gram calculation, that will make your life a lot more easier. So now you understood what is a basic value of gold or how to find it in the international markets. Let's get into how you can actually trade in gold in the Indian market. That's what you need to know here. So the first thing that you need to understand is that trading is possible only in derivatives. We're talking about MCX, multi-commodity exchange trading. So you can still trade in gold or buy gold by investing into your gold mutual funds, your gold ETFs, your digital gold, but that's not what we're talking about here. In MCX, you only have derivatives contracts to trade upon, which is either futures or options contracts. And in this, right, or inside gold, you also have 4 different types of gold. What are they? Gold, gold mini, gold guinea, and gold petal. So there are 4 categories based on the weight calculation. And for easy trading, because of the different margins, you can use any of these 4 according to your needs. But we'll also need to get into liquidity, so wait for that. So in the Indian market also, you can just come search gold here on TradingView. You can find gold futures on MCX, and you can see that the current trading value is 79,023. This is for buying 10 grams of gold. So when you come here, you'll understand deeply why 4 of these categories exist. So the first one is gold, where your trading unit is 1 kg. Whenever you're going to trade gold futures or options in MCX, the trading unit, you're actually going to trade 1 kg worth of gold. But if you come to TradingView and you search gold on MCX, you can find out that the value is only 79,023. So earlier we calculated the value to be more than 80 lakhs. Let's take 80 lakhs here. But why is the price in MCX only 79,000? For that, you just have to look at this quotation to base value. So the base value or the price that you see on MCX is for 10 grams only. So if you do the simple calculation, 10 grams is nearly 80,000. 100 grams will be nearly 8 lakh, and 1 kg, that's the calculation that we did earlier. The cost for 1 kg will be around 80 lakhs, which was the earlier calculation that we had. But if you're looking into gold mini, you can see that the trading unit is different. It's only 100 grams. That means the margins that you require to trade will be 1/10th. You don't need as much money to trade in gold mini as you would have required in gold. Similarly, gold guinea only needs or only has a trading unit of 8 grams, and gold petal only has a trading unit of 1 gram. That's what it means. You can choose any of these 4 categories based on the capital with which you want to start your trading journey. So I'll also show you how to open each of these contracts in your broker's terminal. So here I'm using my broker, which is Fires. You can use any broker that you want, right? So here I'll go ahead and type gold. So when I'm typing in gold, you can see that I'm again getting MCX gold as well as NSE gold. So if you remember from the previous crude oil video, you should be choosing MCX gold because that's where all the trading volume is. But you can see something interesting here. So if I type in gold without adding anything else, you can see that what's coming first, gold Feb 25 futures. That means the year 2025. February futures. But after that, what is coming next? Gold 25 April futures. So do you see what's happening here? For the gold major contract, futures expiry is once every 2 months. You need to understand this very clearly. So right now, it is January. You don't have the trading contract for that. You only have it for February. And similarly, after that, you only have it for April. So I'm going to go ahead and add February futures here. So in the same flow, let's go ahead and add the gold mini futures also. So for that, you can come search gold M. Right? When you search gold M, you'll be again getting MCX as well as NSE gold. Always go with MCX only. So since we are already in the flow, let's go ahead and add gold mini futures also. So when you're coming here, you can see that gold M, just type in gold M and you can see MCX again. Only go for MCX Gold M. The next trading contract is only on 25 February, but then you have it for every single month. You have it for March, you have it for April, and similarly, you have it for 3 months going forward. But why not January? Did you think that because today is only the middle of the month? Because unlike NSE, where the contracts expire near the end of the month, on MCX, the contract expires in the beginning of the month. So futures and options contracts will expire on the 5th day of every single month. And if 5th is a holiday, then it will be expiring on the 4th. Okay, make sure you have that in mind, because as I've said in the beginners video multiple times, you do not want to be taking delivery of any of these commodities. It's going to be a very, very headache inducing process because the margins required here are very huge. The leverage that you're getting here is even greater. So if you're trading in gold futures and you're forced to take delivery, you have to pay a margin of at least 80 lakhs. That's what we discussed earlier. Plus whatever charges as well as penalties that may be there. So we generally don't want to take delivery. So make sure you have these expiry dates in mind when you're trading in futures and options in gold. But when you're coming into gold guinea, the dates here are all very different. You can see that gold guinea expires on 31st Jan 2020-25. That is the last working day of every single month. So let's go ahead and add that. We'll add gold Petal also here, right? All are only MCX futures. So make sure you have that in mind. Now I want to see and understand what is the margin required for me to trade in any of these in the future segment. Let's quickly go ahead and check that. So if you're going to buy one lot of gold futures, you have to, or you need a capital of 8 lakh rupees. Okay. Make sure you have that in mind. You need a capital of 8 lakh rupees to start trading in gold futures. But what if you don't have that capital? Do not worry. We'll also be looking into what is the capital required for gold mini. Right? So gold mini will be 1/10 the cost. You can see that you only need 79,000 rupees to trade here. One contract, one futures contract, you only need 79,000 rupees. But when you're getting into gold guinea, again, the game becomes much different here. It is 8 grams, right? So not directly divided by 10, but for 8 grams, you only need 6,436 rupees to trade here, to buy or sell one lot of futures. And if you're going to gold petal, you can see it's a game-changing thing what they've done, right? You only need less than 800 rupees of margin to trade in gold petal. But quickly scrolling through each of these charts, you can see that something is very curious here. The maximum liquidity or the best candle or price action happens inside gold mini. That's where traders are focused on, and that's where you should also be focusing on if you want to take serious intraday trades. If you're going for positional and you have a smaller capital, you can look at the other categories, but you should always be worried about the spread being offered here. You should be only using limit prices to trade, especially on gold guinea and gold petal. So I would suggest, as a beginner, even though the other categories look more exciting because the margin required there is very, very low, I would suggest that you go with gold mini contracts when you're starting your trading journey. And similarly, if you're going into the option segment, I would suggest you to look at gold mini call options and put options again. So I've added 79,000 call option and 79,000 put option here based on the gold minis futures value, which is around 78,970 here. So again, quickly going into how much capital would be required to trade one lot of options here in the gold mini market. You can see that the required margin is very straightforward. Okay, it is only the premium which is there multiplied by the lot size. So here the lot size is calculated as 10 for gold mini and the required capital is only 6,645. But for selling, the game changes. You need at least 71,000 rupees to sell the at the money call option. When you're going out of the money or in the money, this number will be wildly different. But I would suggest, as beginners, try not to go for the option segment, especially in the commodities market. Here, if you do not really understand what you're doing, especially as an option seller, you might get into a lot of trouble. Okay, so if you're starting, I would suggest go for gold mini futures. After that, if you want to try out options, go with gold mini options buying side, and only when you're a pro. And that too, I would suggest only for hedge trades, go with the gold mini options selling style. And as always, you're just getting started with trading. So I want you to understand how much your PNL will move based on 1 rupee movement in gold's price here. So in gold 25 Feb futures, which is a gold major contract, 1 rupee price increase from 79,019 to 79,020 will have an effect of 100 rupees in your PNL. And in gold mini futures, 1 rupee price movement will have an effect of 10 rupees on your PNL. So you can do your calculation on the percentage of profits that you can receive. That is super important. So I would give that to you as an assignment before you come for the next video session here. So now I hope you understood what is gold trading in MCX, the multi commodities exchange. What are the different types of categories of gold and what are the types of categories that you should be selecting to trade. Okay, that is the most important that a lot of people will not tell you. They'll just give you the theory and you'll go ahead and you'll make losses because of the low liquidity in other contracts. Make sure you learn all the liquidity of the contracts before you start entering into them. So let's move ahead into discussing silver. So we'll do this pretty fast. Again, silver follows the same logic. Silver price, Indian price is calculated with silver USD multiplied by the USD INR rate. So silver also on the international markets, you can find it, the pricing by coming into TradingView. You can add it here and you can see that the current price of silver is 30.32. So do the same calculation that we did earlier. converting, again, this is in ounces. We want to convert that into grams. Then you can multiply it by the USD INR value and you will get the INR or the Indian silver price equivalent. Okay. And with that, you can compare or you can start to think about what should be the trading price in the Indian market. So make sure you think about that. So now when you're trading in silver, here also you only have derivatives contracts in MCX for trading. That is either futures or options. As we talked about earlier, like gold has gold mutual funds, gold Bs, that is gold ETF. Similarly, silver has all of those opportunities for you to invest in. But no, this MCX and commodities trading are not an investment opportunity. These are trading opportunity. So even though there are silver ETFs, silver Bs, you can go with all of that if you want to go for investment. If you want to get into trading, there is only futures and options available. So here also you have 3 types of silver which is available. One is silver, the next one is silver mini, and the third one would be silver micro. So we'll quickly try to learn what is the difference between each of them. So silver's major contract, you will be trading on a trading unit of 30 kilograms. Silver mini will only cost you 1/6 of it, and silver micro here you'll only be trading for 1 kilogram. So that's the difference. Again, these different categories have been introduced only for making it easier for retailers to come into the market and for you to start planning your trades better, because our capitals might be lower. These contracts will help us get into the MCX markets much more easily. That's why they exist. So let's quickly go add silver into our watch list so that we can understand what are the capitals required. So come search silver on your trading terminal. You can find out silver 25 March futures here. So again, you have to understand when gold had February, then April, then June as its expiry days for futures. Here on silver, it is alternate. The next contract you will be seeing is March futures. Then you will be seeing May futures. Again, 2 months gap, but the figures are alternate to gold. So if gold was Feb, April and June, here silver would be March, May and July. So make sure you understand this really well. The contract naming and the contract expiry is much different from NSE. So without learning this, it could be a bit trouble for you. So make sure you watch till the very end. So here I'm going to add silver March futures into my watch list here. I'll go ahead and add silver mini also. Just type in silver M. Silver M has the February 28 February 2025 is the expiry here. I'll also add silver micro, which is expiring on 28 Feb 2025. You can read it here, right? 28 Feb 2025 futures. So I'll be adding that too. So silver major contracts expires on the 5th day of every single month. The micro and mini contracts expire on the last trading day of the month. Okay, make sure you have that also in mind. So to buy one lot or trade in one lot of silver, let's see what is required here. So if you're going to buy one lot of silver futures, you'll be needing a capital of how much? 5.27 lakh rupees, either to buy or sell. There is no difference in futures contracts. You'll be needing a capital of 5.27 lakh rupees. But to make that easier, MCX has introduced the gold mini category. Here you can see the capital required is only 87,944 rupees. That is 1/6 of what you needed to have. Okay, make sure you have that in mind. The capital required is best for silver mini. And one more thing to note here, if you're going into silver micro, there is a slight difference because silver micro has decent liquidity. While I told you that do not try to go for gold petter or gold guinea, I would suggest that if you're a good trader, you can even consider starting with silver micro. So you can see the capital required here is only 17,000 rupees and there is decent liquidity with which you can start your trading journey. So in the major contract, 1 rupee price difference in the futures cost will have a PNL impact of 30 rupees plus or minus 30 rupees. In the mini contract, you'll have a difference of 5 rupees in your PNL for every point difference that you see here. And in the micro contract, you'll have 1 rupee difference in your PNL for every single move of this 91,516. Whatever is the price of silver micro here, you'll be seeing 1 rupee difference in your PNL. So hope you understood what is happening in the gold and the silver markets really well inside MCX. But there's one other combination of both gold and silver which is available, which we talked about earlier, which is called as bullion. Okay, that's what we're going to discuss here. Gold and silver benchmark. So benchmarks of gold and silver together is called as bullion, and you can track it by looking at MCX Bulldex. It is a particular name. You can come search for it on TradingView or even your broker's terminal, and you can find it under MCX Bulldex. So Bullion Futures Index, which tracks the real-time performance of flagship MCX Gold and silver future contracts together. At what ratio? Again, these are coming in together. So at what ratio? Gold at 63.7% and silver at 36.3%. So combining both of this, they've come out with something called as a Bullion index, and you can start trading in that as well. But the funny thing here is, even though it sounds like a really cool thing to have, do not try to go trade in it, because this is a liquidity here. There is absolutely zero liquidity. I don't want any of you to even think about trading in the Bullion index inside MCX. Make sure you have that in mind. So now you understood gold, silver and bullion indices and what to trade inside each of them. We'll quickly go into what is called as a gold to silver ratio, because I told you I'll be giving you a trading strategy. This is sort of like a positional trading strategy that you can take with a very, very low risk, right? So we'll get into that. So what is a gold to silver ratio? You can easily find it out by coming and searching on Google and finding what is a value today. So you can see that on this website here, the value of gold to silver ratio today is at 88.974. So what does this value say? It is a simple ratio of gold price divided by silver price, and historically people have come up with a certain value for what should be the ideal gold to silver ratio. So if gold to silver ratio is above 80, that means gold is overvalued and you should be looking at silver for most of your long trades. That means if the market is going on a bullish mood from here, silver is more likely to outperform and this ratio will match up. But if the ratio here is coming down below 60, that means silver's price is more strong now. That means silver is probably overpriced, and that if there is a rally coming up, gold will be much likely to outperform in the rally. So make sure that you understand this concept of gold to silver ratio really well before, or if you want to get started with investing or taking positional trades in gold or silver at all. Make sure you understand this really well. It's a simple hack, but it's a very, very effective method. So getting into the last part of the video, which is things to check or data points to check. So we did the same for the crude oil video as well. So let's do it here. What will determine the prices of gold or silver? So the first one is global economic conditions. So based on the global economic conditions, the prices of especially gold will be moving by quite a lot, because gold is being seen as a safe haven asset. If the economy is not doing well, there is a high chance that gold prices will start shooting up. That is why it is even called as a really good hedge for the equity markets as well. When the markets are not performing well, it means there is something wrong with the economy. At that time, gold prices tends to go up. Okay. And when the market is very, very strong and everyone will make more returns by investing into equity, then gold prices might move sideways or might not outperform by that much. Okay. That's one thing that you need to understand about global economic conditions. Then you also have interest rates and inflation. Gold being a safe haven asset, if inflation is going high, gold prices, or there will be a lot of demand for people coming and buying gold because they see gold as a value storer. So inflation being high means gold will be very, very favored in the international markets. And currency fluctuations also you should be knowing about, because we're trading in the Indian markets. Even if the gold prices internationally stay the same, only because of the rupee differences or the rupee devaluation which is happening now, the gold prices in MCX will start moving up. So you need to be very mindful about the currency fluctuations as well. Whenever you're trading in any of these commodities, please have a chart or a tab open for analyzing the USD INR rates also. The fourth one is geopolitical events. As we said, any uncertainty in the global markets, the equities will underperform, gold will much likely outperform, and also understand supply and demand dynamics. So let's take the case of silver. So in one of our podcasts, we had in depth gone and discussed what or how does silver's price move? So silver has a lot of industrial applications. So if there is huge demand for silver in the industrial space, silver's prices will start moving up. You need to understand that also, that silver is not always seen as a safe haven asset. Sometimes it is seen as a alternative or a cheaper alternative for gold, but mostly silver around the world is being used for industrial purposes, especially for making batteries as well as solar cells. So you need to understand that whenever the supply and demand dynamics across the world changes because of higher demand for electronics or any reason, the prices of these commodities will be very, very likely impacted. And going into the next slide, why do traders like gold and silver trading in MCX? One, technical analysis works really well. Markets with support, resistance, and even trends are usually very well followed because it is also traded in the international markets. There is very less chance for easy manipulation, right? So without that easy manipulation, price action is always or mostly well respected. Market news and economic data releases also need to be watched out for. Correlation with USD and bond yields. This is something that you can look for. I'm not going to make it complicated. And one thing that you really need to understand is global and gold and silver ETF flows. So if a lot of people, again, like in India, we go ahead and purchase gold jewelry, that will drive up the gold prices in India because there's a lot of demand. Similarly, there is something called as a gold and silver ETFs across the world. So if a lot of people are buying into these gold ETFs, that means there is a lot of demand. If they're selling these gold ETFs also, there's a lot of supply. People are trying to sell at any cost. So all this will start affecting the gold and silver prices. Also, you have to as always, understand that risk management is a crucial part of winning in trading. That means you need to deeply understand that it is futures and options trading. There are a lot of risks involved and you need to do a proper capital allocation. Do not go ahead and trade with 100% of your capital. I showed you earlier, right? Gold petal, gold guinea, whatever. So even there, do not go ahead and trade or start trading if you have a capital of 5,000 rupees. I would want you to start with only a small portion of your capital so that you can get used to it. Even in the future, whenever you're trading, keep some capital aside for possible drawdowns that can happen in your trading journey. That means a drawdown, a loss should not take away from your trading capital. Think about it that way. So that's it for this video today. Hope you got this concept really well and you've understood the theory and the mindset which is required to trade in each of these commodities. And make sure you hit the like button and get subscribed if you want to watch more commodity videos, and also watch our podcast on gold to silver ratio. I'll be linking it here. This is Ajay Ajith signing off. See you all. Bye bye.